update, and this is for Tuesday, and we're at the 24th of May, 2022, time about 8:15 a.m. Central Time. Well, we're walking into a lower stock market. You saw Snap's earnings got hit, and that carried that part. We saw Zoom was up a little bit, but giving back a chunk of those gains overnight that it had put on. Best Buy reports today. I think Ralph Lauren reports, so we get more retailers coming into the mix. Tomorrow we get the FOMC meeting. But that's still pressure on the market, and I'm still of the opinion that rallies in the stock market have been just bounces in a bear market. A strong Monday often leads to an attempt, a strong one, at a Tuesday break. We're certainly have been since 4 o'clock yesterday, actually 5 when the markets reopened Central Time. Pressure there. Metals are still getting a bid in gold. I'm impressed with that. And maybe, just maybe, it's because there's been a seismic shift. The European Central Bank has now said it's beginning its interest rate policy hikes. It's not going to go away. Ms. Lagarde made that very clear yesterday. The only argument is the size of the initial increases. Are they 25 basis point, 50 basis point hikes? How far do they go? That'll be another argument. But they're on their way, which has taken the euro from roughly the 104, 103 area, talk of parity, back up to the 107 zone. In my opinion, the British pound's getting overdone. It still has too many serious headwinds, and Governor Bailey is certainly going to attack that in some manner, and how he has to do it is with higher interest rates. In the grain market, it's interesting what's been going on. Corn's down a little bit today, and I think it's the shift between soybeans and corn that you're now fighting. One day you're going to plant less corn, the next day it's okay, maybe not so. That gives the beans a lift, and that's where you're at with those two markets. In wheat market, obviously you're facing still the scourge of what do you do with all the lost Russian wheat and the Ukrainian wheat. People don't want the products. You might not agree with me on that, but I just read a report this morning that there's a record amount, 62 million barrels of Russian Ural oil is at sea on tankers floating without a buyer. It's a way to store it. Well, got to tell you, that's an awful lot of oil. In Redbook Group, we came out this morning, and again, it's still double-digit numbers. Do you remember when these numbers were pushing 13 to 14.5%? They've been slipping. And I pointed out to you that's because at this time a year ago, America had been coming out of the COVID lockdown, and what do? We saw surges in sales. Now, when you're comparing this to that surge, it's not quite as great. We're going to get this morning at 8:45, the S&P Group is going to give their May manufacturing and service sector PMIs. A lot of people are going to look at this number, and they're looking to see, is the market going to be able to hold on? What's going on there? You saw in the Eurozone, I'm just going to drop right here, that their manufacturing and service sector PMIs came out down, but not as bad as they could have been. People are looking at this and saying it's not so bad. Germany's numbers for this came out okay as well. So it gives, again, it's this old rationale. If your service sector PMIs are okay, it gives cover to European Central Bank, to the U.S. Central Bank, to make moves on their interest rates. New home sales data will come out at 9 this morning. I can't imagine it's going to be higher with interest rates where they're at, but you can get a bleep surprise, but the trend isn't for higher. Which brings us to the marketplace again, and so many people talking yesterday, maybe that's all it for the stock market. I'll tell you, I agree with the Goldman piece that was written overnight, and that is you'll know the market's over when 2 events happen. The first event is going to be when the Fed signals it's over. Right now, all they're signaling is they're going to get ahead of inflation, and they're going to do that via interest rates going up until they're ahead of that number. Number 2, you need to get the VIX crying uncle. It's got to get back up into the 40, 50 area where people are just throwing in the towel in the stock market. That's what'll drive it there, and you create a natural bottom. I'm not disagreeing that a 20% break that we hit just the other day in the stock market isn't getting into the threshold where 4 of the previous large breaks have gone and found their footing between 20 and 27% declines. However, There's a number of breaks that went well beyond that into the 30-40% area. Is that the one we're headed to? Only time's going to tell, but just because you approach 20% the first time to think you have a bottom and nothing has changed in the marketplace, nah, I can't buy into that at all. So I'm going to still look at the market from a bigger point of view that it's got a problem. I'm looking at the dollar and now scratching my head. Could we have seen a near-term top in the dollar? That would be beneficial to the stock market because it would make U.S. corporations more competitive abroad. As for the bonds and notes, they're going to be back and forth here fighting a battle as they wait for tomorrow's FOMC notes. But it's nice that the market is just observing it. The Fed might get scared if you saw all of a sudden monstrous intraday breaks in stock indices. I'm not saying that'll happen. That might get their attention as well. I haven't seen that occur. And other than that, let's see where the market carries us. Now, one of the things that I want to remind you of is one of my most important studies, which were Bollinger Bands. If you're watching my end of the day reviews, you know that you're hitting these upper and lower bands and you turn from them. You've got to learn, in my opinion, how to put this into your trading arsenal. It is one of the most important tools I've ever seen. If I had to just bank one thing on everything I've done as a trader, this would be it. Another important tool is learning how to work with outside days, but I'm developing that course for you. But in this one, you get 13 videos. It teaches you what is a Bollinger Band. I start you off and give you an idea with PowerPoints, how to work with them. Then I take you to real examples. And then each morning in my morning Spider and ETF video, along with my morning futures, as we're reviewing the markets, we're going through how this all works, how you work with it, where's the market hitting those numbers. You hit them on a regular basis. You will see them every week hit in some markets, be it stocks, ETFs, futures markets. Learn how to play with it. If you want more information on it, go to our website. Under the word education, it's fully spelled out. I think you'll like what you see. And when you get the course, I also give you a couple of weeks free to my morning subscriber videos. That pays for almost the course itself, just so you know the cost of those. And if you come up here, if you don't want to go to the website, just take your cursor, move up there, go into the word education. It's all laid out there with the full explanation as to how I teach, what's involved in the course. I think you'll like what you see. I'm Ira Epstein. You have yourself a great day. I'll see you at the end of the day with our market wrap-ups.